So the first question that we have to start us off with is a volume detection here, and I've got a little written description here. Came in with the question. So the key part is we want to find volume bars, or basically we want to detect when volume is 50% larger than a moving average, right? Than the volume moving average here. So I have a chart open, ready to go, and I've marked a couple of areas that clearly look like where the volume is 50% greater than the moving average, which is our cyan line there. Right now, when we're dealing with percentages, percentages require math, either division or multiplication here. And so BloodHound is not a math indicator. So some indicator will be required to do that that math that's involved, that division or multiplication to convert to a percentage. So luckily we have an indicator that can do that for us, and we're going to use Chameleon to do to do this multiplication math, so we can basically get to this 50% here. So let's do this on the chart here first. So what I'm going to do is put SI Chameleon on the chart. So, little history. Chameleon, it was initially generated so that BloodHound could get all the various price data. That's how you could get all the special price data into BloodHound. But all this price data is now actually built into BloodHound now. So Chameleon's not used all that often anymore, but it's kept for the sake of older systems that were built using Chameleon. So it's in there for backwards compatibility. But what we're going to use today is the scaling factor, right? So scaling, if you're going to scale something, that's a multiplication here. So what we can do is we can actually scale the volume moving average indicator here. And the way we can do that is we can use a NinjaTrader little trick here, and we can change our input series. So instead of the instrument price data going into Chameleon, we can change this and we can feed the volume data. So let's see here. So volume's not listed under the instrument, so let's go into the indicator. And sorry, we needed to go into the indicator section anyways, because what we're gonna do is we're gonna scale the volume moving average up by 50%. So let's adjust the period. All right. So in this example here, the trader wants to use a 20 period there. So let's change that to 20. Click OK. So now you can see we're feeding the volume moving average 20 period into Chameleon, and we want a 50%. We're checking for 50%, so that's going to be, so we want to scale it up by 1.5 there. And then the next thing is to get our plots selected, and volume doesn't have high or low. Volume it just has one value, and that's the volume. There's no low to volume or high to volume. So I'm going to turn these plots off, like so. And the way NinjaTrader works is that the closing price, there we go, the closing price is what the volume is going to be converted to the closing price. when you feed an indicator into your data series, NinjaTrader converts that indicator value to basically the closing price. So let's get this turned on here. And let's see, let's pick a color. All right, and let's scale that up a little bit. And let's also put this on the correct panel. So let's see, that'd be panel 2, I believe. Let's hit apply. And yeah, there we go. There's our red line, and we have one other plot turned on here. Let me go turn that off. Oh, I accidentally set the low to white. There we go. Put that on transparent. There. Okay. And oh, I need to make one other adjustment here. Yes, I forgot to adjust my look back period. So let's make sure that's set to 1. So this look back period would actually be applying a secondary smoothing to the volume moving average indicator, right? So we don't want to apply a secondary smoothing. So that's why things aren't quite exact. But now there we go. Now if we look at this, we can see, so there's the volume moving average, and then above it, scaled up 50%. Is the Chameleon plotting that volume moving average scaled up by 50%. So yeah, so there we go. So we have our volume moving average scaled up, and now what we can do is we can do a simple comparison. So for example, right, we can compare the volume to the plot coming out of Chameleon, and we can see, is the volume greater than the volume moving average scaled up by 50%. So in this particular bar, not quite, but we can see here, whenever volume is higher than our red line or higher than Chameleon, then we know that volume is greater than 50% of the standard volume moving average, right? So anyway, so we can see the areas that I circled, and definitely a bunch more other bars as well here. So now we're just going to take Chameleon and compare it to volume now. All right, so let's scale the panel back down. All right, and let's get BloodHound open here. All right, well, first thing I need to do is give our BloodHound template a name. All right, the 7th today. Save that. All right, there we go. So we have a file name for BloodHound now. We're ready to go. So let's see, let's just start working on the logic template here. So let's see here. So let's see, let's give this name here. So volume is 50% greater than the volume moving average 20 period. All right, and all we need is a comparison solver for this. So let's connect that comparison solver up, and then let's give this a name here. There we go, a little shorthand abbreviation name there. Good enough. So let's see. So input A is going to be volume, and input B will be our indicator. There is no right way to do this. We could put volume in B, and then the volume moving average, well, not the volume moving average, but actually Chameleon, we could put that in A and volume in B. We could do it either round, but we just have to adjust our outputs, depending on depending on what data we put in A and what data we put in B here. But I'm just going to go put volume in A here. So right, I could select the volume indicator, or I could just select volume here as one of the types. And then B, this will be our Chameleon indicator. So let's go find Chameleon. There it is, Chameleon. And so let's see. All right, so our look back is set to 1, and let's make sure we have the correct plots selected. So remember, we're using NinjaTrader, converts nested data to the closing price. So we need to select the closing price. And the next thing we need to do is feed the volume data into Chameleon here. So let's keep scrolling down to volume. There's volume. And we're going to hit the nest input here button. You can see now volume is being fed into Chameleon, just like how we did it on the chart, right? We replaced the input series on the chart to get volume into Chameleon. And so same thing here. We're taking volume and we're using volume as the input series into Chameleon by using that nest input button there. So in the volume, right, the volume doesn't have any parameters, so there's nothing to set. Volume only has one plot, so there's nothing to change there. But if you are using some other indicator that might have multiple plots, you gotta go and make sure you have the correct plots selected, for the plot that you want to feed into your other indicator. So, all right, so let's click OK. Or actually, let me just double check Chameleon here. Just want to. Oh, see, I did forget one thing: the scaling. So let's adjust the scaling here. So we need to scale it by 50% or 1.5. There we go. And the closing price is selected still. Okay, I think we're good to go. All right. Well, one thing we do need to adjust is our short output there. All right. And let's see here. So let's see, I'm not getting what I expected. Well, let me double check something here. Yeah, that looks correct. Let me try something else here. Let's go back to indicator value and I'll use the volume indicator here. Oh, sorry. I know what I did wrong. Hold on a moment. And so let's just put this back to volume. All right. My mistake. I nested the volume in there. Kind of got off track here a little bit. So let's see. So let's go back down to the volume. I needed to nest the volume moving average into Chameleon. All right, so I got the volume moving average selected. You notice how the button here, the nest button, is disabled right now. So when that happens, what you just need to do is click on your indicator that's already in here. So we just click on Chameleon, get it selected, and then click on the indicator that we want to nest into it, and then now the button's enabled there. So there you go. Plug that in there. Okay, so now we got the right data nested into Chameleon. And so let's go change the period there. There we go. All right. Got a little carried away about talking about the volume. Put the volume in there by mistake. So Right? You know, so I guess this kind of shows, you know, it's easy to kind of get off track there. So whenever something's not working, just double check your work. All right, so, and let me just double check Chameleon. So look back's 1, our scale is still 1.5, and we're still using the closing plot. So that looks good. And our volume moving average is 20 period. Okay, there we go. Now everything's working as expected. So there we go. Now you'll notice I set the comparison solver up to give us a long and a short output, right? Because volume is a non-directional indicator. It's just data, right? So depending on what the trader wants to do with these volume spikes, you know, the trader might want to, you know, generate a long signal when that happens, or he might want to generate a short signal. You know, so that's why this is set up to generate long and short. And then if other solvers and other logic is combined with this, then the other solvers and logic will isolate, will actually take the long and short and convert it to either a long signal only or a short signal only, right? So when you're building, you know, conditions that are non-directional, such as volume is non-directional, the rule of thumb is generally, you know, 99% of the time you want to generate a long and short output, you know, for that particular solver that's, you know, that's detecting a non-directional type of condition. So, all right, so that does it for that question there. Here we go, a screenshot. All right, so this next question involves Heiken Ashi bars, and we can see what's circled here is whenever we get a Heiken Ashi bar in the opposite direction of this green and red moving average, right? So if the moving average is in a downtrend, then whenever we get Heiken Ashi bars that are moving upwards, if we get up Heiken Ashi bars, then a signal is wanted. Let's see. All right, so a signal direction is not mentioned in the question. All right, so I'm just going to have to make my own assumptions here. All right, so if we're in a downtrend, I'm going to assume that a short signal is wanted when we get basically up bars, Heiken Ashi up bars here. So with that, let's make some adjustments to the chart. All right, so let's first put the Heiken Ashi on here. And let's see, I'm going to need some kind of moving average that mimics this green and red one here. I could probably use the SuperTrend. Let's take a look. All right. All right, well, I'm not finding any moving average that's kind of continuous. So I'm just going to have to use the anaSuperTrend. And the reason why I'm using the anaSuperTrend is so I need an indicator that can, a moving average that will flatten out. The same thing as what I see on this screenshot here. I can see that the moving average will flatten out during certain periods here. And this moving average also seems to be, you know, definitely trying to detect trend directions as well, you know, based on its coloring, just assuming from its coloring here. All right. And also, I just want to note another screenshot also came in. So, right. So the let's see, who'd this come from? Gord. All right. So Gord was able to build a solver that in BloodHound that at least detects when this custom moving average is in an uptrend and versus when it's in a downtrend here. So that part's already done. So, and this detection probably comes from the indicator. Right. So with BloodHound, if a moving average goes flat, BloodHound's not going to be able to know if the indicator's in a downtrend or an uptrend if the moving average itself is flat. So the indicator, right, so this custom moving average indicator will have to output some kind of special trend direction information that BloodHound can read. And it looks like, judging from the screenshot, looks like that indicator does that, and Gord has been able to use the threshold solver to detect the trend direction that this indicator is outputting there. So that part's done. So, all right, so let's go back to our chart. And let's kind of clean the chart up a little bit. There we go. All right. So this isn't exactly, or the anaSuperTrend is not exactly like the screenshot, but the important thing is that, we have these periods where the moving average is flat. That's what's important. It's flat, but it's still in a downtrend. And so let's open up BloodHound and get to work here. All right, let's see what kind of name to give this. Let's see. This is really long here. Let's kind of shorten this up here. A lot of abbreviation. So opposing bar direction of a moving average trend. And this is actually going to be a Heiken Ashi bar. So opposing Heiken Ashi bar detection of a moving average trend. All right. So first, let's detect the moving average trend. Right. So in this case, we're using the anaSuperTrend. So the trend of the moving average, that trend has to come from the indicator. We can't look at the slope of the moving average because when it goes flat, the indicator is still saying that it's in a downtrend, even though the moving average is flat. So we're going to use a threshold solver this time instead of a slope solver. Right? Slope solver is not going to work when the moving average goes flat, but a trend solver is going to work because the moving average itself has to tell us the trend that it's in. And this will become apparent here in just a moment. So let me give this a name. All right, so we're going to find the anaSuperTrend trend direction. And so let's replace the SMA with our anaSuperTrend. Let's see, there we go, anaSuperTrend. And I'm just using the default settings here. And we're going to look at the stop dot. So like that. Oh, actually, no, I'm sorry. This was the key. We're not looking at the stop dot this time. We're actually looking at this data series called trend, right? So the indicator itself is telling us the trend that it's in, and that's what we need to know. Right, so this is special information coming from the anaSuperTrend there. So let's select the trend. And typically, if if your indicator is in an uptrend, then typically this trend data is going to be a positive 1. And if the indicator, if the moving average is in a downtrend, then typically this trend data is going to be a negative 1, right? But it all depends on the programmer on how they did that. You know, maybe this trend might be 0 when it's in a downtrend, something like that. So if you don't know, you'll have to ask the programmer of the indicator what this trend data is, but usually we can figure that out pretty quickly. So if we put, if usually you can just leave the threshold at 0, and in the long output just put greater than, and in the short output just use less than, and that will work, you know, the vast majority of the time. So, all right, yeah, so there we go. If we take a look at this, great, we can see when the indicator is in a downtrend or in an uptrend, right? So we can see it doesn't quite correlate with the plots, but you know, that's the indicator's decision, or the programmer's decision to do this. So we can see we still got one red plot, you know, but the trend is saying that it's in an uptrend, even though it's plotting red on this last bar, right? So on the bars where the trend flips, we can see there's a slight disconnect between, you know, the blue plot and the trend data that we're getting. So, right, BloodHound's outputting short when the anaSuperTrend is still giving us a blue uptrend plot, but you know, that's up to the programmer to kind of make these decisions. There's not much we can do about that. So, yeah. Well, actually, yeah, there is a little trick. We could use the displacement and set that to 1. And now you can see everything kind of shifted over by 1, right? So it's kind of kind of a workaround there. So, but I'm just going to leave it at 0. So, all right. So we have our moving average trend identified. And so next, we need to identify these green bars, right? So these opposite Heiken Ashi bars is what we need to detect here. And actually, before we go any further, let me switch over to a range chart, because I do believe that screenshot was on a range chart. Yeah, some kind of rich range 8-tick. So this is some kind of, so underneath the Heiken Ashi bars is a range chart here. So that might make a little bit of a difference here. All right, so there we go. We want to detect, oops, sorry. We want to detect all the green bars when we're in a downtrend here. So the next thing we're going to need to do is detect the bar direction, right? The Heiken Ashi bar direction. Now, the bar direction solver, that works on the underlying bar data. That works on the actual chart bar data, not the Heiken Ashi. Remember, the Heiken Ashi is an indicator. So this chart is actually a 5-range chart, right? It's not a Heiken Ashi chart. It's a 5-range chart. So the bar direction solver is going to operate on 5 range bars, not the Heiken Ashi. So the Heiken Ashi is an indicator. So we're going to have to use a solver here to detect the direction of the Heiken Ashi. And to do that, we're going to use the comparison solver. So what we can do is just compare the Heiken Ashi open to the Heiken Ashi close and determine the direction of the Heiken Ashi bar. All right, so let's give this a name here. So this is a Heiken Ashi bar direction. Something like that. All right, so input A, let's see, that will be, let's see, considering the default outputs here, input A will be the Heiken Ashi close, input B will be the Heiken Ashi open. So let's go load this up. All right, there's our Heiken Ashi, and so we want the Heiken Ashi close. So let's select that, and the input B, that's going to be our Heiken Ashi open. So again, let's go select the Heiken Ashi. There we go. Heiken Ashi open. There we go. Now, if you're using a custom Heiken Ashi, there might be some parameters here that that you might need to adjust if you're using custom parameters. But Ninja's Heiken Ashi doesn't have anything, doesn't have any adjustment parameters there. So, all right. So all we have to do is just select the correct Heiken Ashi price that we want to use. All right. So there. So now we can see, right, the output from our comparison solver, right, is matching the direction of the Heiken Ashi bar, right? So red down bars, we're getting a short output here. So, but remember, when we're in a downtrend, so when our moving average is telling us we're in a downtrend, on the green up Heiken Ashi bars, we want to generate a short signal. So we actually need to reverse this output here, right? We want to generate a short signal, but we're getting a long output, so we actually want to reverse things here. So what we can do is just reverse the output like so. There, like that. There we go. So now, when we have Heiken Ashi up bars, we're getting a short output from BloodHound since we want a short signal. So I think all we need to do now is grab an AND node, connect those two together, and there we go. All right. So all the Heiken Ashi bars in the opposite direction of our moving average, they're all being marked now, just like so. Right, and let's pull up the screenshot here. So there we go. So this, like the screenshot illustrates, if we're in a downtrend here, all the green Heiken Ashi bars are being marked, like so. All right. And let me expand upon this. Just offer another tip here. Let's say you want to eliminate, kind of small bars like this. Say like you're only interested, in getting a kind of a signal when we get these larger Heiken Ashi bars. You want to eliminate kind of like these spinning tops here. The way we can do that is going back to our comparison solver, right? It has a difference value here, and so if we want to, we could make sure that the body is at least one tick in size, like so. And let's see, let's adjust our output here. There we go. And yeah, so now we can see that these two smaller bars, which are going to be less than one tick here. Yeah, so like I think this one's about one tick, and this one's definitely a fraction of a tick. So these bars were not marked now. Only the larger bars that are larger, where the body, remember we're measuring, so our comparison solver is looking at the body of the candle, right? It's looking at the open versus the close. So if the body is greater than 1 tick, it's going to get marked here with an output, right? So, and of course you can adjust this however you want, to detect larger or smaller body sizes. So, but let's put that back to 0 there. All right. Well, that does it for question number 2. And it doesn't look like there's any follow-ups on this. Let's see. Oh, I spoke too soon here. All right, so it looks like maybe Frank has a follow-up question. All right, yeah. So Frank's got I guess an interesting twist on this. So Frank is saying, can we change the signal to be generated on the bar on the bar that changes direction again. So for example, can we change the signal so that actually it marks the reversal bar? So we want to mark the reversal bar in the direction of the trend, right? Such as that, or such as this bar, or such as this bar, right? So we want to mark the reversal bar, in the trend, in the direction of the trend. And yes, let's see here. So let's just try a comparison or a inflection solver. So this should do it for us. All right, comparison solver. And so this is going to be a Heiken Ashi inflection. All right. And so let's plug in our Heiken Ashi indicator here. Heiken Ashi. And so, right, we want to know when the closing price reverses direction. Like so. And so this is going to be interesting. Yeah, I'm going to have to build another set of solvers here. So, because one thing I noticed is even though this is an up Heiken Ashi bar, right, it's not actually a reversal. It's still an up bar, even though price pulled down, the closing price, actually reversed down, but the bar itself is not reversed. So what I'm going to have to do is make a copy of this Heiken Ashi bar direction, right? Because this Heiken Ashi bar direction was set up to give us an output in the opposite direction of the bar direction. Right, the outputs were reversed. But in this case, since we want a signal in the direction of the bar instead of a signal in the opposite direction of the bar, I'm going to have to make a copy of this. So to do that, there we go. There's our Heiken Ashi bar direction. Let's see. I should probably rename that. So let's just call this a reversed Heiken Ashi bar direction. There we go. We got that one. I'm going to make a copy of it. And this one will be the actual Heiken Ashi bar direction. So I just need to reverse the outputs. There, like so. All right, and so let's switch back over to the logic board. And let's put that new solver on the board here. Like so. Let's grab a AND node, like so. And we also need the trend of our indicator, right? We need our indicator trend as well. Let's plug that in there. There's that. Let's plug in our Heiken Ashi bar direction. All right, so we're getting closer. So now all the bars in the direction of our moving average trend are marked. And now let's put the inflection in there. And that should isolate, oops, hold on a moment. And there we go. And yeah, great. So now we have the bars marked, the reversal bars marked in the direction of the trend. Yeah. Let's see. We are once in a while getting some other bars marked here. Let's see. So we might need some. Yeah, we're going to need some additional logic filtering here. All right. So let's find out why we're getting. Sometimes we're getting these extra bars marked. Let's see. Here's another one. All right, let's see. Let's take a look. And yeah, so when we, yeah, you know, if you actually look at the closing prices, right? The closing price is down here, and then it reverses up, and then it reverses down, right? So we're kind of getting these. Yeah, we are getting an inflection of the reversal, but that's not exactly what we want. All right, let's see. How can we solve this? All right, I think the easiest way is going to be, so we can take this, we can take this bar direction, and I can use a signal blocker. So that, yeah, this is going to be the most reliable way here. All right, so let's connect our Heiken Ashi bar direction into the signal blocker. Let's take a look at this. And so what I'm going to have to do is kind of guesstimate how many Heiken Ashi bars in the same direction, you know, how many, basically like how many green bars in a row or how many red bars in a row might I possibly ever get. You know, like what's the maximum I might ever possibly get? You know, like yeah, here's a nice long section of red bars and then green bars. There's a nice long section. Let's see. You know, it looks like just kind of doing a quick spot check, definitely less than 20 so far. So, you know, it's going to depend on the underlying chart, of course. You know, I'm using a 5-range underlying chart to the Heiken Ashi. So, you know, you will have to do some spot checking, but I think I'll be safe on a 5-range if I just put in 20 bars. So my signal blocker can block for 20 bars, like so. And so now if I take a look, right, I can see only the first bar of the bar, the first bar when the bar changes direction is now has an output on it. Right, so in here, let's grab an arrow. Right, so there's our first red bar. That's the only one marked. Right, then we get a green bar, so it's marked first red bar, first green bar, first red bar, and right. So all these other red bars are not marked. First green bar is marked. Right, so kind of look through the chart. You know, this is half of what we want. So now we just need to get rid of the red bars or the down bars from being marked when we're in an uptrend. So like that. So we just need to make an adjustment here. Let's disconnect that. Connect that into the anode. Let's take a look at this. Okay. All right, this is looking correct. Yeah. Let's see, let's go back here, find those bars that I had marked that were incorrect. Let's see, where were they? There we go. All right, so there's my little marking. So remember, that bar used to be marked, it's not marked anymore. And let's see, back over here, there we go. There's the other green bar that used to be marked green, but it's not marked anymore. All right. Yeah, so there you go, that did it. Yeah, so I just took I took our Heiken Ashi bar direction, comparison solver. Right, so this is a comparison solver that's looking at the Heiken Ashi to determine the bar direction. I just plugged it into a signal blocker, and for this 5 range chart, I'm blocking for 20 bars. That seems to all that's necessary. So so after further testing, if you do see a signal sneaking in, if you do happen to get like 21 Heiken Ashi bars all in the same direction, you're going to get an extra, you're going to get a signal that sneaks in on that 21st bar. So if you do ever witness that, then just increase your block signals for, just increase this number here, just up it a little bit, and you'll be good to go. So, all right, so there you go. There's the modification on that. So, all right, so we want to identify the following areas on the chart here. All right, so we're looking for a number of bars. So we're looking for, in this example, 28 15-minute bars. And let's see here. Yeah, he kind of mentions a time period. And the key of what he's looking for is he's comparing the lowest, he's comparing the high to the low, the highest point to the lowest point of all those bars. He's looking to see, if they exceed 20 pips or 20 ticks or not. Yeah. So really, to do this, an indicator is needed. So so basically, an indicator is needed to track the high points, the highest high and the lowest low, of the last 28 bars. Right, an indicator is needed to do that tracking for BloodHound, and then BloodHound, the comparison solver, we could put a distance of 20 ticks into the comparison solver, and see if there's a 20 pip or 20 tick difference, between the high and the low. But the high and the low needs to be tracked, by another indicator. So, yeah. All right. So let's see. And so this is an opportunity for Chameleon once again. So it just happens to be that Chameleon can do this tracking for us. All right. Let's see. So, all right. gonna have to remove the Heiken Ashi bars to do this. So let's remove the Heiken Ashi bars. Let's see. All right, so Chameleon. Let's get back to Chameleon here. So we can have Chameleon track the highest high and the lowest low for 28 bars, or however many bars we want. So let's get Chameleon on here again. So there's Chameleon. And you noticed two of the plots, the low plot and the high plot, are labeled bounds versus an SMA. Right? So when we use this look back period, and we're going to set it to 28, so that's going to be 28 bars, right? So with this look back period set to 28, what that does is it applies an SMA smoothing to the closing price. To the high price, it's actually going to track the highest high bounds, the highest bounds of the last 28 bars, and the lowest bound of 28 bars, right? And all the other prices, which are in the middle of the bar, are just going to be moving SMA, smoothed moving averages of those custom prices there. So let's get this on here. Let's maximize this. And yeah. All right. So and let's see. Might as well switch this to a 15-minute chart as well. And it looks like I'm gonna need some more data on my chart. So just a sec. Yeah, let's connect. That's it. Oh, I am connected. Let's see. Maybe I need more days. I've got 5 days. All right, let's reload some data. There we go. Okay, now we're good. So let's see. Let's take today, for example. And let's see. So 28 15-minute bars is approximately midnight to 7 a.m. So let me just kind of mark this here. All right. So there's midnight. Midnight to 7 a.m. Yeah. So now that we have Chameleon, right, tracking the highest high and basically the lowest low for the last 28 bars, now we can feed that plot, right? We can take that plot data and feed it into the comparison solver, and we can check, is this distance more than 20 ticks or 20 pips, right? So with that, yeah, let's recreate this inside of BloodHound. All right, so let's start a new logic template. So let's see, what should we call this? All right, 20 tick range detection. Let's see. It's actually a 28 bar 20 tick range detection. Okay. And so to check for that 20 tick range expansion, we can use the comparison solver, right? and it has a difference. So we can check, is there, so many tick difference, between input A and input B. Also, we can measure in ticks. We could measure in points. We can measure in ATRs and Renko bricks. But we're going to do it in ticks, so we'll leave it in ticks. All right. So let's see. All right. So input A. Let's make that our high, right? That'll be our highest high, and input B, that'll be our lowest low here, right? So input B will be our lowest low. So let's go set this up. So we need to go grab Chameleon. All right, there's Chameleon. So let's set our look back, right? It's 28 bars, like so. 28, not 38. There we go. And so that's going to be our highs. Input A will be the high. So that's already selected for us, so we're good to go there. And input B, again, Chameleon. And again, 28 look back, 28 bar look back. And we're going to, B is going to be the low. Just like so. And next, let's put in our distance. So 20 ticks, like so. And let's connect that up. And since this, 20 tick kind of range or expansion, it's non-directional. So I'm going to change the outputs here, like so. Yep. And let's see here. So it looks like that happens pretty darn quickly on oil. So how about, let's see if I can find something that's less volatile. Yeah, let's see. Oh yeah, probably I bet you the 6E doesn't move that much. Or maybe it does. Yes, it sure looks like it does. But then again, yeah, I guess that makes sense. The 6E has a really small tick size. Let's see, let's try something else. Let's see, let's try the 6J. Let's see, no, 6J has quite a movement too. All right, let's try the ES. Well, all right. Let's see. Yeah, the ES is not too bad there. Okay. ES. Yeah, the ES is kind of, let's get to the morning here. All right, yeah, so the ES it looks pretty good. So in the mornings, it hasn't quite moved 20 ticks until it gets later on into the morning. So, okay, we'll use the ES as our example. Now, so one important part of this that I'm reading into this question is, it sounds like kind of this is wanted, this information is going to be wanted at 7 a.m. If you're on Pacific Coast, then or then that's slightly after the market opens. Let's see, if you're on Mountain Time, then that's slightly before the market opens, right? Or maybe this 7 a.m. time falls in line more with London trading hours, where Forex is more active. So I'm gonna kind of filter this detection here to 7 a.m. You know, or we could even filter it to a range here. Say like from 7 a.m. to 7:30, or maybe 6:30 to 7 a.m. something like that. We can kind of filter our signals here, so we're just not getting these long continuous. So that way we're not getting, you know, these signals all the time. We're not getting our 20 pip detection all the time. We'll just get it during a certain time period. So to do that, let's see. I could use a time solver to do this, but instead I'm going to use the SI TimeBlock instead. So let's see. Let's just mark 7 a.m. only. All right, so our indicator. So what comes with BloodHound is a special indicator that has some unique functions to it. It has some things that the SI TimeBlock cannot do, right? So the you know, the TimeBlock, or I'm sorry, the time solver, you know, it's quick and easy to set up, but you know, its functionality is basic. It gets the job done. But TimeBlock has some other unique functions. You can see it has all of these special time periods here as output data. So we'll get to that in a moment here. So let's see. Let's set this up for 7 a.m. Now this is going to be, you know, so this time is the time zone that your indicator is set to. Whatever your indicator is set to, that's the time zone for it. Let's see. So we're only interested in 7 a.m. So I'm just going to leave. So I'm just going to adjust the start time to 7 a.m. That's all we need. And you can, you know, turn on or off certain days of the week. So for now, right, it's just the work days, Monday through Friday. And so with our start time marked, you can see there's an output called is start bar. So in other words, so this will identify the start time. So we're going to mark that. Like so, and next set our outputs like so. So here we can see, right, the 7 a.m. bar is marked. All right, and going back yesterday, the 7 a.m. bar is marked. All right. So that's kind of one of the unique things that the TimeBlock can do, is it can, you know, it can find a specific bar for you there. So with that, so if I took that, use an AND node, I can connect those in like so. And so now all we have marked is the 7 a.m. bar. So now BloodHound will tell us, you know, is that 7 a.m. bar, you know, did price, you know, did the market, you know, within the last 28 bars, did the market expand more than 20 ticks or 20 pips? So, and actually I can see here, yeah, actually 28 bars. Doesn't go from 7 a.m. to midnight. It's a few more bars than that. But you know, in any case, you know, you can adjust Chameleon to look back however many bars you want here. So, and let's give this solver a name here. Let's see. Let's see. So what shall I call this? The highest high, 20 ticks from the lowest low, something like that. And I could even, let's see, go in here and say 28 bar, highest high, and, you know, see if it's 20 ticks from 28 bar, lowest low, something like that. All right, at least we got some kind of name in there. Okay, yeah, there. So, and let's see, let me expand upon this even a little further here. So, you know, instead of just marking the 7 a.m. bar, let's say we wanted to kind of mark a period of times. Let's say like a half-hour period of time. You know, so that would be, well, these are 15-minute bars, so this would be only 2 bars, but so let's grab another threshold solver. I'm going to connect that in. And let's say we want to you know, get a heads up, you know, of from 6:30 to 7. And oops, I grabbed an inflection solver by accident. Sorry. Let me delete this. All right, well, instead, since I'm on the solvers tab, I'll just make a copy of this. And let me rename this. All right, so 6:30, sorry, to 7 a.m. And we're going to go into our time block indicator and make the adjustments. So our start time is going to be 6:30, and our end time is going to be 7 a.m. And so now, instead of identifying, you know, the start time bar, we want to identify the bars that are in between the times, right? So between times would be, you know, between the start time and the end time. So, all right, let's give that a shot, and we're going to put this new solver on the logic board. So let's go here to existing nodes. So there is our all right, there we go. Let's plug that in, and here we go. So there we go. So 6:30, and 6:45, and 7. There we go. Those 3 bars are marked now, and we can grab another AND node. So I can take our comparison solver, connect that in, there we go. And again, I can name my AND nodes here to tell me what's going on here, what's coming out of these. All right. And I'll just kind of reverse these around a little bit. There we go. There. All right, let's see. Yeah, it looks like, you know, the markets or the S&P has been pretty active recently, so we're definitely getting more than a 20-tick expansion in the morning. But you know, maybe on currencies, it's currencies may not move quite as much. All right, so this is marking when. Let's see, actually, let me just read the question again here. So actually, so this logic is actually reversed. It's actually the reverse of what's wanted. So this is actually marking when there is a 20-tick expansion. But what's wanted is to mark when there's less than a 20-tick expansion here. So we want to identify when the range from the highs to the lows is less than 20 ticks. And let's see, to do that, yeah, so to do that we just need to adjust our outputs here. So let me build another solver here. All right, so in this solver, I'm going to rename this here. So we're identifying when the highest high is greater than 20 ticks from the lowest low. So this new solver, we're going to find out when the highest high is less than 20 ticks from the lowest low. So to do that, we can just adjust our outputs there. Right, so now we're using this output. We want to know when A equals B within 20 ticks. In other words, so A is our highest highs, B is our lowest lows. So when does the highs equal the lows within 20 ticks? You know, right? Or less than 20 ticks. So let's put that new solver on the board. There. And I'm going to disconnect that. So there, let's look at just this solver, right? So here's the new solver here. So whenever, take a look here. So whenever the highs to the lows is less than 20 ticks, there we go. It's being marked. Right, there we go. Small, you know, small expansion range there. And yeah, small expansion range there. So remember, the lows are looking back 28 bars. So there's our low 28 bars ago. There we go. Low expansion range. Okay. So, all right, so let's take that, plug it into our AND nodes. All right, now let's see if we have any kind of opening range here that's less than, well, I only have a few days of data on my chart, so let's double this here. Nothing on the ES. Let's add some more bars, more days. Okay, I'm just going to scroll through the chart real fast. No. Let me try the NQ. And nothing on the NQ. Well, actually, I should. Since we just switched contracts, yeah, let me go to the continuous contract. All right, let me try YM. Nothing. Even the YM expands more than 20 ticks in the morning. Let's see. Z. Yeah, I bet you the treasuries don't. Ah, there we go. Yeah, the treasuries are usually pretty consolidated, or non-volatile. So there we go. Yeah. So today, the treasuries made less than a 20 tick move. Yesterday, less than a 20 tick move. Let's see. That'd be Tuesday, Monday. Let's see. So this would be Friday. Wow, it seems like every morning. Yeah, the treasuries don't make. Ah, here we go. So finally, we get one day here. I think this is Thursday or Wednesday of last week. The treasuries did make a big move. And so let's see. Yeah, here's our 7 a.m., 6:45, 6:30. So there you go. Treasuries made more than a 20 tick, ranged more than 20 ticks from the low to the high. And it's not marked. So, all right. So there you go. So there's our example, our kind of our proof that it's working. So, all right. Well, with that, let me take a look at the chat board and see if there's any follow-up questions on this here. All right. Yeah, I don't see any follow-up questions on this. So, yeah, we'll say this one's done and answered. And just to recap, so we've got two different comparison solvers. So the one on top here, that's going to detect when the low to high has expanded more than 20 ticks. And this, the one that's plugged in right now, detects when the high to low does not exceed 20 ticks or 20 pips. Okay, so let's take a look at what's being used here. So we have a inflection solver on price, right? So we have a price inflection solver, and right, so he's just checking when the closing price, reverses direction, basically, right? That's what an inflection is the reversal, the reversal of an indicator, or the reversal of price. And so let's scroll over here. So what's being asked here is that, what's being wondered is why you can see these two down bars here. Why aren't those being marked? Right, so we have a red bar, and then we have a green bar, and then a red bar, right? So it seems like, well, this reversal down bar should be marked red, right? But that's not always the case. So, and I'll just kind of give an explanation why here. And if we take a look at the screenshot, he's using a 4-range chart here. So let's convert over here. So let's see, let's go to all right, I'll just make up a quick inflection solver here. There we go, done. All right, now let me get my chart set up. So let's see, I'm gonna put this on a, oh, hold on a moment. Let me switch over to oil. There we go. And I'll put this on a range chart. And let me clear my drawings. Okay. And now I need to hunt for one of these bars here that's not marked. Perfect. Okay, found one. Hold on a sec. There's a bar. Oh, and perfect. Here's another one. There's another one. Right, so there we go. There's a couple of bars there that right, look like they should be marked, but they're not. Right now, the inflection solver is not actually. Let's pull BloodHound back up here. All right, so looking at our inflection solver. Right now, an inflection solver is not looking at the bar direction. Right, it's only looking at the closing price. Right, so you know, when we set up price, we're only looking at the closing price. Right, so the inflection solver is not looking at the bar. Right, so that's different than looking at a bar direction or a bar length. So these two solvers are actually looking at the bar's data. You know, more prices within the bar. You know, so bar direction, you have to look at the open and the closing price of the bar. You have to look at two pieces of price data, right, to get the bar direction. You know, in a bar length, you have to look at two pieces of price data. You have to look at the high of the bar and the low of the bar, two pieces of price data. But our inflection solver, it's only looking at one price data. That's the closing price in this case. So the reason why this down bar is not being detected as you know, as a reversal down is because it's not. If we draw a line, so let me draw a line from the close of here to the close of there, right? We can see the closing price moved up. But if I draw a line from the close here to the close of the next bar, well, it's flat. There was no reversal. And the best way to see this, if you really want to know what's going on, you know, when you're looking at bars, or in the case of the screenshot, he's using the, you know, US was it OHLC bars. You know, for I forgot, there's kind of a nickname for this type of bars, but Ninja calls them, yeah, OHLC bars, but you know, basically kind of like US chart bars. You know, the best way to look at it is to use line on close, right? Because remember, the inflection solver is using the closing price. So if we convert our chart to draw a line on the closing price, like so, and hold on a moment. I wish I knew why Ninja would not use my color scheme that I like, but it doesn't sometimes. Okay, there we go. So the orange, right, that's the closing price on, right, looking at the closing price. So let's get rid of those two lines there. So if we look at this right there, and let's expand our chart out to exaggerate it. But you see how it's flat, right? The closing price actually went flat. It did not reverse down. But then when the closing price moves up a tick and then it reverses down, then we get a inflection, right? Or reversal point. The same with this bar. Remember this bar right here? So price is coming down, and then the closing price goes flat. And then it reverses up. And so you can see after, right, so once we get the closing price reversing up, then we get the green or the long inflection upward, right? But on this bar here, right, there is no inflection yet because price went flat, right? So let me put this back on candlesticks and let's see. I had found a shortcut before. Let's see. I had discovered a quick way to get my color scheme back, and let's see, I'm not finding it anymore. Okay, just a moment, guys. All right, there we go. Okay, and let's see, let me go find where we were working at. There we go. There's a spot we were working at. Yeah, so there we go. So you know, so these kind of what do you call it? Shooting star and hammer, right? The closing price didn't actually reverse, and that's why there's no inflection signal there. All right, let's see. That does it for that question. Well, guys, with that, then yeah, I'll wrap this workshop up here. So if I don't see you in tomorrow's Blackbird workshop, then have a good weekend, and hope to see you guys next week. And again, always feel free to use our email to send your questions in ahead of time for these workshops. Just let us know, you know, that you would like to have your question answered in a workshop, and Mike will, right, save your question for these workshops. So, okay, guys, with that, have a good rest of your day. Hope to see you tomorrow, or have a good weekend. All right, bye-bye, guys.